Hello, everybody. I am going to explain a little bit what I know about the stock market, why it's a good idea to invest, and how to invest a little bit, maybe. Well, I cannot give you any advice, but this is how I am doing it. So I heard people who have money and they save money and whatever that you should invest in the S&P 500, diverse. So there is this mutual EPF. Actually, it's an EPF that is called SPXL. And what it is that it gives you 3 times as much exposure to the stock market, to the S&P. So that means that if, say, the S&P goes up 1%, this goes up 3%. So it saves some time, and this the S&P goes up, keeps going up and up every year. So, however, this goes up. I already find out that it goes up 22% a year. So maybe there is a way that you can even get more than that. And let's see. So this is how I'm doing. Okay, let me just give you an example. I bought this stock right around. Well, there's no way to point here. Right there, I bought it at 72. See, 72 yesterday, and this morning around. Let's see. I sold it at 73. See, when it was 73, right around there. Actually, right around this line. I sold it at 73. So I made 1% from 4 p.m. yesterday until today at around 9, I don't remember. I sold automatically. I made my 1% and I'm done. I'm done for the whole week. Didn't even have to look at it. I did look at it, but I didn't even have to. What happens is that sometimes it goes down. You buy it and it goes down. So the best thing to do is to sell and say, well, wait, I wait until tomorrow or whatever. You have 3 chances to miss in 1 week. So it's called day trade. So the broker gives you 3-day trades. So I made my 1% there. And why do I want to do 1% in 1 week? What is that? What is that? This seems like it's nothing, but it is something. Because I made a spreadsheet. Here it is. So this is the. Oh, I can point here. See, it says 1.009. That's the first week. The first week you have 1. Let's say you have $1. Then you have $1.01 almost. And week 4, $1.02, almost 3 cents. And so it keeps growing. By the end of the year, if you look down on week number 52, you'll have 57, almost 58 cents made. So how? Well, if you only invest $1, it's not worth it. You're gonna be wasting time. It's better to get a job and get paid, and it's better to go that way. But if you are able to save, say $10,000, and the way I did that is by not driving a car, because I don't pay insurance, I don't pay gas, I don't pay anything. I pay for $100 a month for an electric bike that gets me around. So just with that, working for a couple of years, I have saved money. So the reason why I put $10,000 to start is because if you have less than that and you start investing it, you're gonna lose a lot of time, and you're gonna give up because it's not worth the time. It's better just to go to work and don't even worry about it. Meanwhile, while you're working, if you wanna play with fake, it's called paper trade, I think. You can play with that, and it'll work. Okay, so this video is already 5 minutes. I have to hurry. I don't want to make it too long. So this is how it goes. On the first year, if you start with $10,000 and you do that every week, actually, you have the whole week. You have a chance, like if you screw up, you have a chance to make it up. We'll do whatever it takes. 1% every week. You'll have, at the end of the year, you'll have this much, 15,792, without adding any money to it. You can put it in an IRA, a Roth IRA account, and you can put 6,000 if you're younger, and if you're, I think, 55 or 52 or older, you can put 7,000 a year in there. So in a couple of years you can have 10,000, 14,000, 12,000. If you save, if you give up a few things, you can do this. Then that's how it works. You can do a little bit of investing in the morning. If you ride the bus to work, I guess something. You have to figure something out so that you have time to invest, or else just don't invest, because if you don't pay attention, you can lose money, right? So this is how it goes. So this is interesting because you have the third year, you'll have 25,000, and then after 10 years, you'll have, in 12 years, you have $1 million, just by doing 1% every week. And this is the calculations. So is it worth it to? I think so. Yeah, I think it's worth it. There is no way you can do that much with real estate. I'm not saying real estate is bad, but look. Now let's go back to the other graph that I was showing. There is always a change. Here comes the thing. I'm gonna pause this. Alright, is this still recording? I have a compressor that comes on. Did it go off? Is it recording? Yeah, 8 minutes and 22 seconds. Okay, so I was gonna show you the S&P graph and how I do it. Oh yeah, this is very important. I have an RSI graph on the bottom. You see that purple line on the bottom? When it hits the low, below 10, actually this is an RSI based on 3. It's like it bases 3 bars here. See this bar graph? It bases, like the 3 bars go down. It means that the stock was oversold for whatever reason, and it's a good chance to buy. Yeah, well, you can look up RSI and you can read all about it. And this is not the purpose of this video. I'm just using the RSI, and when it hit that point, that was a point to buy. You see how the price was low over there? It was under 72. I paid too much for it because I bought it too early. I didn't wait until it hit the point when I was supposed to. So I screw up, I guess. But this gives you a chance to screw up. Okay, so there it is. Then the RSI, when it's time to sell, when the RSI passes the 10, right there, at that point right there, it's time to sell. Actually, you can keep going a little bit more, but you're risking that it can go down. So this is way overbought at this point. At this point, you don't want to buy. But people still buy it for whatever reason. Maybe tomorrow is going to keep going up, or maybe not. I don't know. That's more risk. Who knows? So there it is. Basically, that's how I do it. But I sold at 73, so I sold here. I didn't even wait until it got there. What happened? It was that I was kind of busy, and I set up an automatic sell. When it hits 73, it sold automatically. I wasn't even looking at the RSI. I wanted to make my 1%, so I'm like, whatever. I'm done. That's all I needed to make. I didn't want to risk it, and I said that's it, and I sold it right there. But people kept on buying and buying and buying, and it went all the way up. Now, it's possible that at this point there is another one called SPX S for short, I believe. You have to look it up, which is the reverse of this. So if you buy that one, I think it's at 1750 or something right now, 1736, something like that. You can buy it there, and it'll start as this one drops. I don't know if it's gonna drop or not, but it's possible that tomorrow opens at 74 or opens at 73, or who knows, maybe tomorrow opens at 76. I don't know, but don't buy this one. I wouldn't buy this one. You can buy the other one, or if you're not sure, just wait until next week. That's it. You got your 1% done. You're done. You don't have to even worry about it. So this is why this is nice, because in a short period of time you can make $100 if you have 10,000. But if you have 20,000, it's $200. $200 in one night is not bad, and it's good to do it every week, because like I said, you can have a nice retirement. What else? I think that's about it. Let me think here. Let me just pause it, because I don't remember something. No, that's it. I don't remember anything else. And so let's review what I said. I said that we have a spreadsheet that shows you how your money can grow if it grows 1% every week. And like you do it 52 times a year, that's 52%. No, it's more than 52%. It's like 60%, because you're making money on the money that you already made. So that adds up, keeps adding up and adding up and adding up. So it comes up to whatever I said. What was it, 57 or something? Anyway, that's a good return. That's really good. Really, really good. So then I explain how to do it. You have to use the RSI as an indicator of when to buy, when to sell. Oh yeah, and now I remember what I was going to say. Here, I was going to show that there are more opportunities. See there, when you see a big bar, that means it went. Now let's just look at the RSI. Okay, right there it was low. Right there, right? So my alarm would have gone off. I have this Trader View program that tells you when to buy, when to sell. That compressor went off again. This is a Trader View program. You can set up an alarm with this. You see right there? That's a good time to buy. over there it was started to be oversold, but people keep on overselling more and more and more, so it goes, so you can have a chance to just buy right there and 71.80, 71.60, or you can just wait a little bit and say you're late, 71.20. It keeps going down. These bars are 30 minutes each. That's the way I have it set up. I have RSI 3 based on 30-minute intervals, which is, I was looking at it, and this seems to be the one that works the best. And then you wait, and right there you sell. When it goes all the way to, see, it says 91.32, that's when you sell. So you go from 71.4 to 73. Ooh, that's like 2% right there. And that was on April 23. No, April 10. That's in one day, on the same day. Or you wait until if you don't want to do a day trade, you can wait until the next day, and you can still sell it for 73, 70, more. You can even sell it for 73.60. I mean, it's better just to sell it and be sure, like I did today, right? There is another opportunity over here. Oh no, see, this one didn't quite make it, but it still made 1% right there, and that's not even a week away. That's just the day before. So you see, there is a lot of opportunities you can miss. Here there's no opportunities, but you see the purple graph, it doesn't tell you to buy, so you don't buy. Whatever. I see here is a sell right here, sell, buy, not even buy, almost buy, according to this system. 69.5, buy there. And like if you do like I did today, that I bought before, and then you still make money because you can sell at 73 or right there, 69, 70, all the way to 71, 72, right there. So that's another opportunity. That's 31st, March 31st. Keep going. So that's what I wanted to show you, that there are opportunities. You can do this every week. This goes up and down. The worst thing that could happen is that it's flat, that it doesn't go up and down 1%. So you're gonna have to, if that happens, that could happen. That's called volatility. Volatility is low. Then what do you do in that case? You have to settle for doing a quarter on Monday, maybe on Wednesday you do another half a percent. You can still do it. 0.5%. It's always going to happen. Oh, by the way, this graph, the red graph, is called the ATR, is a range. So it ranges, right there is 40 cents in a half an hour. So that means that the price went it changed 40 cents from the lowest to the highest in that one half an hour. So there you go. You can do 40 cents. That's when it's low, because it goes to 80 cents in a half an hour. Actually, now on here is 25 cents, 30 cents in a half an hour. You have to wait more. 20 cents, 60 cents. Whoo, 60 cents. Right here it was 60 cents. I'm looking at the red graph. See, it's 60 cents in a half an hour. That means the bar is gonna be really long. Now, why this bar is so long? Oh yeah. See, it went from really short bars two really long bars right there, and you can see that it was a sell point. Anyway, that's it. I hope you use this and you make a lot of money.